Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over Twitter, go over some information about liquidity in the bond markets, some precious metals, some energy type stuff, the regular commodity stuff that we go over and share together. So we're going to dive in here. I'll give you my financial opinion and comments. If you want to follow me, it's at finding_finance. So one thing that I saw from Goring and Rosenzweig, this is where I grabbed this from. Some I want to talk about in energy, oil specifically. It says the kingdom has announced an increase in its production capacity level to 13 million barrels per day, after which the kingdom will not have any additional capacity to increase production. That was July 18th, 2022. It said, one, I'm at maximum oil output levels amounting to the UAE's complete commitment in this area, Macron said. Second, he told me the Saudis can increase a little bit, about 150,000 barrels a day, or a little more, he added. They don't have huge capacities that can be activated in less than 6 months. At the bottom there, it says we are out of spare capacity. So when we go and we bump up against whatever capacity we have left in this world, we will be at pumping capacity for the world. And it is coming very soon. And that's going to have ramifications to a lot of things. And what I've been monitoring is I'm monitoring the bond market. The bond market is what I'm monitoring because if we go up and hit the limits of oil and we try to exceed it, I think what we're going to see are bond markets starting to have problems because GDP gets stuck. So you have a debt growth of the design of the currency systems versus reality of energy production, bumping up on the production capacity. So that could lead to bond markets having problems and massive inflation. So that's what I'm looking for. So we're going to get into some bond market here. It says the bond market is too big, too opaque, and too complicated to say with any certainty where the next problem will be. But given the huge bond market losses, high volatility, and terrible liquidity, it is reasonable to say many are on edge and not far away from an accident. And that's the bond markets in general around the world. We're starting to see cracks in the bond markets, UK gilts. We're seeing currencies having a lot of pressure. Think of the Japanese yen. And even our bond market in America is having lots of problems. So let's take a look at a couple of things in the bond markets here. So let's look at UK gilts. So this is the 10-year UK gilt that I want to look at. And this thing is just getting smoked to the bottom. Now we are getting that W pattern. I know they stepped in here and saved this market. They're in there buying bonds. So is this a bottoming pattern or not? Tough to say. Tough to say because they're in there actively manipulating things. They say they aren't, but I have my doubts. And then we've got TLT. This is our 20-year bond prices for America. And this thing is like falling off a cliff. This is the large move lower there. You can obviously see that. We've broken out of any support level, and it continues to sell off. The question that, a couple people brought up to me is, what do you think of I bonds? What do I think of I bonds? What about I bonds? The bet that you're playing there is that you think that the yields will go down and that inflation has peaked, or that yields are kind of leveling off, ready to come back down. If you time this wrong, you can still lose money. You can lose principal if you are buying some of these bonds. I don't know about I bonds in general, but just like say TLT, if you're buying TLT and you're trying to catch this, what I call this is a falling knife. You never try catching a falling knife. There's too much momentum behind this. I would not try to catch this if it were me. I don't know if bonds have stopped, and it very well could be a crisis happening in bonds around the world. We saw that in the UK, and it can go around and work its way to other bond markets. Are they going to come out and print a bunch of money to save these markets? Probably. But then it just transfers all the pressure to the currency. We saw that in the Japanese yen. We're going to see that in the UK. So if it were me, I'm not going to jump in front of this myself. I don't own any bonds. Where I would be buying is physical precious metals. I wouldn't be buying paper, contracts of precious metals. I would be buying the physical stuff. If these bond markets are having this large of a problem, we could see a crisis in bond markets and currencies. There's nothing stating that we can't. And I don't know what's going to stop it outside of printing a bunch of money. And if you print a bunch of money, it goes into a currency crisis. You're transferring the pressure, which then, if you think of it from a perspective of risk reward, precious metals are incredibly cheap against everything. And we are in a middle of a raging bull market. Now, you wouldn't know that. You wouldn't know that because what you're doing is you're looking at price. Look at the inventory levels. The inventory levels are getting eaten away of silver, gold, platinum, and all these other metals. So if silver's priced basically and platinum's priced at the middle to high cost production, and we've got massive inflation and the cost curves continue to go up and we're having supply chain problems, I don't see the risk in buying physical metals at this time. I think there's a lot of risk in bonds, especially if they're free falling like they are. And trying to catch a falling knife has not worked well for me. I would not do it myself. Let's get back into some of the other information that we've got on Twitter here. And I wrote this: yields moving up rapidly. I guess no one wants any bonds. This is kind of a bigger picture view of the 10-year yield, kind of stepping back and looking at it. Let me get this out of here, leave out of there. This is a large move higher in the 10-year bond. We've got the 30-year breaking out, and then a big picture view, we can see a major breakout of bonds. Now, is this thing done going up? Would I jump in front of that train? No, I'm not going to jump in front of the train. The train won't stop. It's got a lot of momentum behind it. Obviously, you guys can do whatever you want, but me personally, I wouldn't do that. I would be looking at physical precious metals because that is where the protection's at, and there's low downside risk, great upside potential, at least from my perspective. And then I've also got, are you ready for the launch in platinum? Platinum's outperforming gold on a ratio perspective. It's breaking out to the upside. It's outperforming palladium. It's looking really good. It is outperforming silver, breaking out of its big pattern. Looking fantastic. And then it's starting to break out of the dollar as well to the upside for platinum. Platinum's looking really strong. Definitely want to check out. And this is the big long-term, big picture view of platinum. The consolidation period, the breakout, the retest, and I like buying on the retest. If you've been on the platinum membership, you know how I like retests, and a lot of the companies I buy are ones that are either breaking out of patterns or breaking out of back tests. This was about the inventory levels. The COMEX drain of silver and gold continues. Registered silver drops 1.7% or 650,000 ounces, now down to 38 million. Down 75% since we started this back in January of 2021. Take it all. And we're draining, anyone who buys physical metals is draining the inventories. Draining the inventories. Here is the U.S. Treasury market getting disorderly, and what can the Fed Treasury do to prevent the total bond meltdown? And that is what I'm worried about. I'm not like scared or anything. I'm just worried that this cycle has not gone all the way through. And if we are short oil, and if we're at the pumping capacity, and we're at these systems that are designed to grow exponentially, I don't know if the currency systems or bond markets will survive that. We've been living in a world where we've always had surplus energy, and now I think we're getting tight in energy. Something's going to break here. And I don't know if the Federal Reserve can do anything about it. I don't know if they can save the currencies. So what they're doing is they're raising their currency, the interest rates and everything else. So maybe if they're raising it, they're letting it go, maybe, to be stronger than everything else, but it's just temporary. I don't think it's something that's going to be structural and long lasting. It says platinum is coiling up beautifully on the verge of an explosive move. Last chance, people. At least his opinion. We've got XLE oil stocks ETF breaking out over the 84 level. I don't know if it's closed there, but we are flirting with this resistance level. This is a point and figure chart, and sometimes it's easier to see breakouts on it. And I don't know where it's going to close today. I'm doing this 1:20 p.m., 10:20. Gold has been flowing from west to east rather rapidly. This is the gold flows east. Asia has net imported gold from the west. Lots of gold going to Turkey, India, and China. Remember, some of these are in areas where they've got problems with inflation, like Turkey. Over here, we're just draining everything from west to east. And that's where all the wealth will be, wherever that gold goes. Now, here's something. If housing is still in the business cycle, bond yield inflection is round the corner, mind the lag. Now, I don't know if this is the NHB Housing Market Index. This could mean that we see a 10-year yield that drops. This could be supportive of the housing market. The weakness in the housing market could be the further future strength, if that makes sense. So I think the demographics there, I think the buying pressure's there at certain price levels, but the dramatic increase in yields have suppressed the price in the short term. If we're in a massive bond market problem where the currencies are going to feel the heat, I think the housing market will come back. So it's hard to say. We're at a level where things are starting to definitely slow down. But we could see, based off this chart, the 10-year bond yield slow down. We just haven't seen it in the short term yet. And maybe this diverges. Maybe there is a problem in the bond market and people are running away from it. It says, and just like that, Canadian priced light oil is back at $115 a barrel, thanks to a weak Canadian dollar and a low WTI differential still. This is 60% higher than the average price seen over the last 7 years. There's the average, $71, and we're at $115. Yeah, we're coming back. But that's looking good for oil companies for sure. As it sits right now, that is good looking. Decent size, bullish, symmetrical, blue, inverse head and shoulders pattern on GDXJ, shoulder, head, and shoulder. And are we going to move on up? It kind of looks like that to me. I'm getting bullish on precious metals here. That's for sure. And remember, whenever they print money, if they come out and print money to buy bonds, that's going to be bullish for gold and silver and platinum. And I think that's what's getting priced in right now. Short-term resistance. We're coming on up. Got resistance going across here horizontally. So here's one. Take a close look at this chart and tell me why goods inflation should not come down hard in coming quarters. And I see this a lot, and I don't know if what they're doing is necessarily correct. This is what I'll talk about. They are using the Shanghai containerized freight. It's come on down, but I don't know if the PCE goods inflation is going to come down with it. And so let me come in here, and I'm going to talk a lot about some of this. So I want to talk about this. So what we're seeing is a disconnect in the world, and what they're using indicators that are coming from steady state, and I don't think it takes into account the total in what's going on in the world. So what I mean by that is Shanghai has had a bunch of lockdowns, massive amount of lockdowns over there for the medical event. The lockdowns are going to stop production of production of goods. If you stop production of goods, the goods will go up in price, but the thing that ships it will go way down. So I think this measurement is great to use on a steady state. So if you've been open and everything's running and there's no constraints in the system, then what you're looking at is the demand of whatever that thing is. So if shipping went down, it's a reduction in demand. But if you lock something down, if you shut something down forcefully, of course shipping container freight's going to go down because you have nothing to ship. if you shut down everything that's making it, what are they going to ship? So I would think that the container rates would actually slow down, and that the container rates might go back up when they get back online and start shipping more. So this guy's logic, I think, is not valid. That's what I'll say. URNM, the battle of the spiders. We've got, and I see this a lot. I'm in the camp that it's bullish, irrespective of what the short-term charts will say. This is the Sprott Uranium Physical Trust. We have this one that's coming down that's broken to the upside, and then he's created another one, which is an inverse shoulder, head, shoulder. That's coming out, shoulder, head, shoulder, and inverted. Not, it's inverted. It's bullish, but I cannot be bearish on this, no matter what technical pattern you put in front of me, because we've got raging inflation, we have an energy crisis, we have a low ratio, like everything from a fundamental viewpoint is bullish. So even if we see something in the short term that's bearish, I don't really care. I'm going to hold on through it. Here's another one, Alf, and he does this a lot. So I want to talk about this as well. Fixed income markets are expecting the sharpest drop in inflation ever since the 2008 Great Financial Crisis. And what he's doing is he's saying markets are implying a sharp drop in U.S. inflation ahead. I think what he doesn't understand, and I'm just going to go out there and say it, is he's using this as a predictive function. This is more or less just a representation of the current market condition. So he's saying this is turning around, and I'm going to say it's probably not. Why would I say that? It's not, because the way that they got this to slow down was through means of Strategic Petroleum Reserve releases. The Strategic Petroleum Reserve release is the turn here. This down here was market driven. It was supply-demand fundamentals. This isn't supply-demand fundamentals. If we're at pumping capacity, I think this is heading lower. We are going to head lower. Inflation is going to go up, not down, because of the imbalances in energy. And if you look at the imbalances of energy in the market, the imbalances of energy can be seen in Germany and UK. Is their inflation rates going up or down? And just because you see short-term movements in the price that could be ultra volatile doesn't mean you're going to get long-term corrections in inflation. So I think these guys are not looking at it correctly, at least from my opinion. And when looking at this, I think this is just a representation of what's currently going on in the markets. And I think this will go down when the oil pumping capacity becomes overwhelmed. It's going to go way higher. Worldwide inflation will. Inverted head and shoulders testing the neckline. This is shoulder, head, shoulder for Sprott Physical Uranium Trust. That's the one I was talking about. Definitely looks really good. That's what I think is going to happen is a move higher. It says, so here's JC. It says, we are on the verge of World War III. Gold demand is at all-time highs. Inventories are depleting at an unprecedented rate. Inflation is rampant, and Russia set the stage for a new paradigm in which currencies will be backed by gold to delink them from the dollar. There's a bull market ahead. And here's one from Michael. He says, going to keep saying this until it sticks. The bond market volatility, if it continues, is the end of the financial system with over $300 trillion in global debt. Your portfolio is worthless if it continues. That's why it can't. The end of the world is the bull case, a melt up. I think what he's saying is, with the volatility, this cannot persist the way it's been going. They're going to come in and save the bond market, which then creates a melt up in the markets, which means that they're going to sacrifice the currency, which is also why I like physical metals, because I think this is inevitable. The energy crisis is causing all of this. Coming down here, this is going back to energy. Total global inventories, crude products, drew by minus 12 million barrels week over week. This is total inventories drew by 12 million barrels. Look at this thing decline here. This is crazy. It says, yes, a new bull market is about to be born out of the ashes of capitulating bulls and shorts who focus on nothing but short-term futures price action. The bull market in physical is already underway and paper will soon follow. I love it. I totally agree with this statement. The bull market in precious metals, the physical metals, is underway and the paper will soon follow. Nice quote. I like it. It says, absolutely not advice, but I don't see why it's impossible that gold would trade at $75,000 an ounce, silver at $1,500 an ounce by 2027. The panic pivot, money printing insanity coming will be exponentially worse than anything we've seen. And this is, I'm not claiming that these numbers are right. I'm not trying to say that that's where it's going to go. What I want you to get out of here is, if we have problems in the bond market, which we're seeing, and they transfer all that pressure to currencies, which means it's going to be a lot of money printing, that is where the inflation is going to come from. That is where the crisis is. That is what's going to drive the prices of this stuff. And people are running at physical metals right now. They're draining the inventory. That's exactly what I'm doing. If you give me prices and you give me here, so you have to look at it from this perspective. Where else is money going to flow in the environment that's coming in front of us? With increasing interest rates, I don't think it's going to flow in mass into stocks, although depending on if they transfer the crisis into currencies, it would flow into it. But to go long in the thing that's causing the problem, which is also a great inflation hedge, which is energy. I think energy and physical precious metals are the two spots to be in kind of at a high level look, because of where money can make money and where all the problems are in the system. And that's what I'm trying to gain evidence for going over all this. It says protecting, growing your capital. This is cryptos versus gold. Obviously, we've got a chart that's gold's been outperforming, and we have to see where this thing goes. Here's one. Big picture. The massive divergence between gold and TLT, US bonds, is now ridiculously large. Something has to be broken now, and something's got to give here. So under the old environment, and this is a huge chart here to understand. The old paradigm, and I think this is matching up with paradigms here. The old paradigm was lower. As yields go down, TLT would go up, and so would gold, because gold was tied to the real negative rate or real interest rates. So when rates went down, gold would go up alongside TLT, bond prices. And remember, yields lower, gold and bond prices higher. But something's breaking now. We're seeing a divergence between gold and TLT. What's the deal there? Well, TLT, bond prices go down when interest rates go up. So people are selling bonds and interest rates are going up. But gold is like, whoa. It's like, hold on a second here for gold. Gold's saying, well, I don't want to go lower because going lower is not in my best interest, because inflation's going higher and higher and higher and might be outpacing. That inflation might be outpacing and this is also tying into a potential crisis in bonds, because gold isn't following. And I think what's going to happen is if you see people running into gold, which we're seeing the physical markets start to get drained, I think gold's going to take off and TLT could continue to go down, which is a big paradigm shift. And what I have here is, I said, remember Exter's pyramid. If you're seeing problems in treasury bonds for UK and it could spread across other countries, be careful. And the more trusted holdings are in gold, silver, and other precious metals, not in government bonds. If we are down here, this pyramid the value will collapse down into precious metals if we have that type of environment, in which I think we're kind of in. We're seeing the physical be drained. And then we also have, despite the largest release from strategic stockpiles in history, the U.S. petroleum inventories still fell, and they're continuing to fall. And we saw on the worldwide, the world one, that we're falling over there as well. So there's a lot of stuff going on in the market right now. And we need to be watching the bond market, I think. If the rates continue to just fire on higher, we could have a problem in the bond market. And I don't think jumping in front of that would be a smart thing. So what I'm doing is I'm loading up in physical precious metals. Everybody, I mean, I guess you already know that. I'm a big physical precious metals proponent. And that's kind of what I'm doing. I wouldn't be going into bonds. I'd be going into metals. And I also think that energy is the cause of the problem. So I would also think that energy is going to do quite well and the environment's coming up. But that's what I've got for today. If you guys need help in figuring out how to, figure out this stuff, not from a personal standpoint, but, where to buy precious metals, how to buy them. When looking at some of the companies, what are the best companies, in my opinion, definitely check out the Platinum membership, finding-value.com. Check that out. Become a member of the Platinum member. We do have a Sunday question and answer session at 5 p.m. Mountain Standard Time. You could ask me questions there, and I can show you exactly where I buy my metals, how I'm playing things, what companies I like, why I like them, and so on. So that's what I've got for today. Hopefully you guys are killing it. Give me a thumbs up, subscribe to the channel, and we'll catch you next time. This is Finding Value.